Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 8th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame. You'll notice right here the ES currently seeing a little bit of weakness above the previous session's high price. That's going to be interesting here for today. Again, we have a short-term downtrend that has transpired since the highs above 4,600 were rejected. Since then, we've had a failed new high lead to new lows, and now we're seeing another new failed new high develop here at the moment. If there's a failure to push through the previous session's high and we reject those highs further, a push through the previous session's midpoint could open up an outside day down in the worst case scenario. Overall, right now this market is trying to hold the 4,400 level. We could drop into that zone, 4,400 in the previous month's low, and still see a bounce back up, as right now this market is trading between 4,400 and 4,600, and then down here it's 4,400 down to 4,200. So that's the market structure at the moment. So we may have a little bit more downside to about 4,400 to 4,380, at which point we could see a bounce back up. A failure at this point here opens up a return back toward recent lows. That's the broader market structure. From a short-term day trade perspective, watch the previous session's high. Failure to get through that midpoint, or failure at that midpoint, opens up the previous session's low. Let's take a look here at the NQ. Right now, the NQ also seeing early signs of rejection at the previous session's high. Right there. And that's also at the midpoint of the down day a couple of days ago. We've seen a lower high here come into place after that strong top at 15,250, very similar to how it transpired before. This failed new high again could be an early indication of weakness to come. A push through the midpoint of the previous session, that's 14,475. A push through that level opens up further weakness that could ultimately become a bearish outside day. Much like the ES, there are some key market structure levels here that are in play. The 15,250 level is in play, and then you have about that 14.2 zone right here, and then from there you got down to about 13K. So it's right in that zone, 13.2, wherever that lower edge is. So we may see a little bit more downside again, 14.2, 14.1 in this midpoint zone, and then see it bounce back up as it attempts to stay in this upper market structure here. A failure at this this middle portion here opens up a return back toward lows to trade in this lower market structure. So right now we are back within this range, but the failed new high developing today could open up a test properly into the middle of that range at about 14.2. Above these two-day highs could squeeze nicely. Those two-day highs very, very strong. And it would also coincide with the previous week's low, which could lead to a very nice push higher. So above the previous week's low, which is about 14,660, that opens up more strength ahead. Let's take a look here at crude oil. Crude oil got down into the 95, 96 zone yesterday, finally here, flushing out as low as 93.81. That's what we mentioned before. Do we need to come down here and flush out a bit more? Not just 95, 96, but get down into the 93s here and really take out the previous month's low, at which point we may turn right back around and rally to 105, 106. Just from a short-term perspective, and then the potential to see a move as high as 115, 116, which is being in play as well. So right now, this is a pretty solid rejection here for crude oil. We're seeing a hold at the composite VWAP for the year. And if price can get back above the previous week's low price here, previous week's low is just overhead here at 97.72. That could open up a nice bounce back up toward 100 to finish the day, or finish the week rather, so above the previous session's high. So right now, trying to hold. This is a good spot for crude oil to hold. If it can get above 98s, it starts to open up a couple of handles to the upside and could open the path to a 105, 106 short-term target. All right, let's take a look now at Bitcoin. Bitcoin right now trading with a failed new high at the moment. It's still in the midst of a pullback and is still holding just above the previous month's midpoint. That's going to be the level to continue to watch. You got 42,500 right here as well as a key level. And again, sometimes you got to go through those levels and then reject prices below them in order to see a move transpire, something like this, for example. So we'll see if we get something like that. Right now, we're just seeing a bit of weakness here, but staying just above the previous month's midpoint. Again, rounded bottom still in development, but need to get that rejection on the right edge over here to get this thing going higher. And lastly, taking a look at ETH futures here. Ether futures showing some early signs of a failed new high as well. Prices pushed through this previous session's high, now back below the previous session's high and close. Not the strongest rejection just yet, but you can clearly see testing the previous week and the previous month's close, which are one and the same, from below and showing a little bit of weakness again off of these highs. So that could lead to another round of weakness up ahead. If so, 3,000 and the previous month's midpoint going to be very important. Any pullback into that zone, again, you want to be able to see a defense of that area, and which could lead to a bounce higher back toward recent highs. Again, ultimately, we're looking for price to come back to the previous year's close, 36.85. The higher value relationship that is developed this month should help that, as long as price can stay above that midpoint for the month. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trader room. Take care.